point being is that there's no reason to limit yourself on a repertoire basis because the market is fractal, right? And you guys have heard this word thrown around quite a lot. Your daily strategy is perfectly applicable to an intraday one, which is perfectly applicable to a medium-term strategy. So what I'm trying to say to you is there are ways and means to go about trading longer-term and shorter-term and being the same person. One of the major criteria, however, is that you actually plan some stuff. So today I wanted to talk about that a little bit. Here's how I do my planning. And the more you do this sort of planning, the easier it's going to become and the more accurate it's going to become. What goes into a trader? One, you've got to be a decent analyst. You got to know how to read a chart. And not just read a chart, I'm talking predict the future. A lot of people reacting to the chart, not anticipating it. And how are you going to do this? By practicing trade planning over and over and over again. There's strategies out there where you're basically using a reactive system, let's call it. You know, something crosses this or something crosses that and you do X, Y, and Z, which is fine, I guess. But the market's definitely predictable to a large degree. Number two, trader psych. And then three, money management. These are sort of the major components here. The reason why I'm bringing this up is, from this aspect, how do you feel about having a strategy where you have some stuff on for a couple of days, some stuff on for a couple of hours, some stuff on for a couple of weeks? You have this sort of smorgasbord, right? Because there's trends going on the longer term, and then there's trends on the shorter term, and then there's trends on the intraday. What I'm trying to tell you is, don't limit yourself to trading just on the shorter term stuff. Because the market doesn't always trend on a daily basis. In fact, it consolidates for the better part of 70% of the time. So if you're only trading daily trends, you're going to be in the market 30% of the time, and you better not miss that 30% of the time. Otherwise, you're going to be doing a lot of just staring at the computer for a year, literally. When I do my planning, this is the sort of thing that I look for. You might have a spot trading account and then a swing trading account. It's not a big deal. Have a few accounts to work with. All right, I do my intraday trade plans from a daily and a 4-hour chart. However, the psychology to handle a longer-term trade, in my mind, requires a much more advanced, confident hand. Because you're in the market longer, you got more money exposed over time in terms of unrealized profit. So from a psychology standpoint, managing longer-term trades, I find much more vesting. When I do my planning, here's the way that I look at things. All right, so let's pick a pair, shall we? We're on the pound dollar. We've been talking about cable longs. I'm not lying to you, for 3 days at boot camp. It's finally happened today in one fell swoop. But what we're looking for are setups that we can hold, potential major turning point areas, and then figuring out what we're basically going to do in between. For starters, why would we look for something that goes back to 158? In other words, when we were sitting at 154.5, why would we think 58.5? To me, a couple of things. It made a higher high with respect to that. Marginal, but a higher high nonetheless. This here is exactly this support zone. I use very old school technical analysis, almost embarrassingly simple, nothing high tech. Very low tech. I see support, 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 support. And I think, well, it's pretty much shown us an inability to head lower. If it's going to head higher, this is really the spot for it. Yeah, don't worry so much about the oversold thing, guys. I've seen things be oversold for 6 months or overbought for 6 months. The very nature of a trend is that it's overbought to oversold, in my opinion. So I see a lot of support after making a higher high. This would be the point of no return for the pound. We're going to call this our green zone. Okay, I'm not saying this in hindsight. This is what we planned in boot camp the other day. So the point being, though, is that price action-wise, up, major turning point. So in other words, major turning point on a daily, this green zone would be swing trade area. In other words, trades taken in that area would be fire and forget. Those would be trades you try to hold on to. So if you put a pound long in here at 54.84 today, hypothetically maybe, on a little swing fib on the short term, and it went parabolic, that is a trade that you're not looking to exit. Why? Because you're coming off a major turning point zone on a daily. All trades in between here are spot trades. So only trades taken from turning point zones are swing trade opportunities. Okay, in other words, trades you can hold for a while. Now, where would you anticipate, zooming out here a little bit, and we'll even go to the weekly if you wish, where would you anticipate would possibly be the next sort of major turning point zone here? You can have this trend line up here, and we might overshoot a little bit, but what level would you think would be very significant? Just eyeballing it. I'll go to the daily, it's pretty easy to look at. We'll take a fib of this drop. Well, 157 is important, but bear in mind that you're coming off a higher low after making a higher high. So we're actually anticipating it making a higher high, I would think. Where would be a zone we'd expect to see significant resistance? I would think sort of through here, based on the fib and based on this stuff. So now we've got daily turning point areas. Now, do we know if this is going to do this? Could it do that? Because we're coming off higher lows and we made a higher high with respect to the previous. So by virtue of us making a higher high and a higher low, we're expected to make a higher high. Lots of resistance at 57.20. Lots. And we'd expect a spot trade from there, but not a swing trade. At the moment, we're identifying major daily turning points, which are potentially going to give us swing trade opportunities. What I mean by swing trade opportunities is 200 pips, a trade where we're going to hold it for 36 hours. It will be a trend change on a daily, absolutely. But that doesn't mean to say we're not going to hold this major red zone and potentially do something like this. That could absolutely happen. So these two red areas are potentially swing trade zones. There's one thing I noticed is that a lot of traders think that every trade is going to be this monumental winner. Every trade they take, they expect 274.5 pips. And I'm here to tell you that 90% of your trades are 30 to 40 pip propositions. When you take trades in massive turning point areas, those are the trades with lots of profit potential. So for me, this pound is not an exit until we hit 58.5 to 59. You're potentially in a situation where we could do this. Why? Because that's a major turning point zone. Do I know that? No, not necessarily. Okay, swing trade zone, swing trade zone. So in other words, the shorts are potential holders. I don't know if it's going to make lower lows off of there. Everything in between here are spot trade opportunities. So in other words, everything in between, you're looking to take it to the next short-term level of support resistance. There are spot trade opportunities off these swing trade zones. So let's say you shorted or longed at 80 today here. Where would your spot trade target have been? The spot trade target would simply be the fib of this drop, right around 55.80. We exceeded that, that's fine. But the spot trade target would simply be a bounce of the support to the next short-term level of resistance. Now let's say hypothetically that price retraced here and came to about 56.40 and you longed it. What would your spot trade target be? Notice how now we're in spot trade zones. Yeah, the double top. Asia's likely to come down and push up again a little bit. So where would your spot trade target be there? Well, a swing fib extension of this, probably about 80 pips. Let's say hypothetically that we press up here into London tomorrow and you are sitting around 59.20. Where would the spot trade target be? And what would the trade be? The spot trade target is honestly probably right around this sort of level. Probably trying to take it back to about 57.80. What do you think is going to happen then? Because now you're at a short-term level of support. You're going to cruise all the way to the top. So guess what? You're in another spot trade. See here, now you're at a lower high at what is potentially a turning point zone. Now one of two things is going to happen. The market's going to do this and charge up, or we're going to do this, make a lower high and head down. Which one do you know it is? You don't know. But when you short through here, what type of trade are you attempting? A swing trade, because if you're right, you're targeting down here. And if you're wrong, you're probably going to go break even. I'm not a big advocate of, hey, let me enter my spot trade with a 263 pip stop. No. Your swing trade is entered with your spot trade techniques. So your swing trade, you're just taking a normal spot trade with your normal 25 pip stop. You get it to break even, and the only difference is that you don't take profit. Why? Because you're in a major turning point zone. But everything else between these turning point areas are spot trades, because chances are and probability dictates they're probably not going to stick. So let's do another one. All right, so let's do another one. Pound yen long. 121 zone all week. You can actually see what we've done in between here, right? We've got a major daily green zone identified and a major daily red zone identified. How are these identified? Well, potential daily higher low. And if you line up these three here, you know, swing low, swing low, swing low, hesitation area, potential higher low. How do you know it's going to be a higher low? You don't. Come on. A little bit of price action knowledge in you in there. Now, where's the next major turning point on a daily? Swing high, swing low. Admittedly, you also got some junk through here. You know, you're pretty stepping up to the next fib level before continuing down. So we've got our major turning points identified. Are there any questions on that? Guys, that's support and resistance work. You can do it. All it is support and resistance. How do you move your stop when you're going from a spot to a swing trade? The initial break even is just my normal sort of 25, 30 pips. Then I go break even, let it go. Then once it's created an hourly swing high or swing low, then I start moving my stop below the lows. I'll evaluate my profit target with risk reward relative to the target and then move my stops accordingly. So how do we work out the path? So we're coming off our daily turning point identified. All right, now how do you think we came up with 126, 127? I like to use fibs for this sort of thing as zones because in effect, you're coming off with 50% and now we're going to step up to the next level and then probably try to head down. Give me the next conservative trade here. Anticipate what's going to happen next. Obviously, we're at resistance, but we know we're on our way up here. So what is the next conservative trade? Probably goes down a little bit. Is this a trade where we want to short? I mean, could we make money out of the short? Yeah. Just bang against your weekly central. You probably could. Heck, you could probably make 100 pips. My problem with that trade is, how do I know when I'm wrong? In other words, directionally, we're actually anticipating this going up, aren't we? So if I'm going to take a short, how would I know when I'm wrong? Or do I just give it random 30 or 40 pips and just hope that I've timed it? Tough strategy, that. Okay, so I think for me, conservatively, picking up the buy side is pretty easier. Where would that be? I don't know, we've got support through here, hesitation there. We're going to have this 5 EMA popping its little nose up here for Asia. I don't know, this 121, 122.30 zone looks pretty nice. So something like this, you know, probably into here. Nice trade there. Better part of 150 pips. What type of trade would this be from point A to point B? Spot trade. Spot trade. You're going to take between 80 and 120 pips and you're going to walk away. And you can get creative in between there, right? I'm a big advocate of adding to winners while they're moving. Okay, there's a very advanced skill, and I'd like to do a webinar on it at some point. To me, that's how you make money in Forex. You can spin your wheels, but you don't have to do anything better analytically and make double the money with some creative adding. Okay, so point A to point B. Then what do you expect to happen? We would have gone up 2 days. We'd be hitting these highs. What do you think is going to happen? And now you're probably thinking Monday now. Monday, Tuesday. Yeah, red day. And this will be shortable. Where do you think that's going to go? Down here. Down to this stuff. To the blue line. And then what? To the move fib, exactly. Now this trade in here, okay, so you've gone spot trade, and now you have the move fib of the whole rise, and you're expecting it to go up here, or a fib extension of this to basically these highs. You're talking spot swing trade now, swing trade. Swing. And then you'd like to do this and head up there, spot trade. The entry technique is the same. You're going to look at your spot trades. You're going to wait for a 15-minute confirmation. When you get it, you grab it. When you have 15, 20 pips, you jam your stop in there. The difference is that you're not taking profit on your swing trade attempts. Now, do some of them come back and you give back some unrealized profit? Of course. Of course, that's trading. This is predicting the future. You might be a little bit early on it. Don't be afraid to take it again. You can take 3 30-pip losses for the price of your 100-pip stop, and what are the chances of you losing 3 times in a row? Probably fairly small. And then what's going to happen off here? Yeah, chances are you're going to spot trade down to the first level of resistance. or support. Then it's going to go up, make a double top, lower high. And now you're trying to swing trade. Where you're trying to swing trade to? The whole fib of the rise. Why? Because you're coming off a 618 of the entire drop and previous resistance. That there should precipitate a drop of their whole rise again. It's just support and resistance, guys. That's all it is. But you're taking major daily turning points and then using your intraday skills to trade within the context of that. It takes time and practice, but you got this. You got this. So here's what I was looking for on the pound. Okay, a little drop of 55.10, which we effectively had today. Then we're picking up longs around 60, trying to trade this up to around 56.20. Okay, well, we blazed that. So now we're on to the next level, which is around this 57. That should then bring us back to somewhere around 56.40. We're going to try and take it up to 58.60. Okay, 1 week forecast. How about for the next few days? There you go. Guys, I did this before this candle did that. This is the sort of thing you're going to be doing for yourselves. So this is what I'm expecting on the euro dollar over the next few weeks. I'm looking for it to come back down before heading up. And I'm just showing you this to just illustrate how you can do this for yourself. We were looking for this to go off sort of 23.5 down to 120.50, 120.80, and then bounce. Go look at the level we bounced at. Quick definition of a major turning point. So if you looked at the euro dollar right now and you said to me, if I was going to predict a major turning point on a daily chart, give me a number, give me a range. Looking at the euro dollar, give me what you think is a major turning point zone in the euro. It's happened twice there already. All you're going to do is look at the chart. Yeah, we've found resistance here before, but give me a major turning point area. Bear in mind that you just broke a swing fib, so I'm probably going to move fib. Well, it looks like they sold this area twice. So I would think that this is a pretty big deal. This is resistance, but you just broke the little short-term swing fib, so you're thinking more move fib. So I would think now that we're probably on our route to doing something like this. Yeah, so there's your turning point. So 25, 24.5, 25, yeah. Here is where I'd flip horses and I'd start to think, fine, I'm now in a potential swing trade zone. If I'm going to swing for the fences, this would be my area. Everything in between your spot trades comes down to 22.60, 22.40. I'm longing, looking for double top, maybe a little higher to this next level at 24 and change. Done. Out. 90 pips. Thanks. Then we're going to probably come back down to where we started from. Cruise up there. Fine. That's more of a little swing trade. I'm going to have to be in that 48 hours. Monday's trade. Okay, now I'm up here. Fine. Spot trade to short-term support, double top, range around, tool around there, stay out of trouble, and then roll over. Anytime you got daily resistance meets 4-hour uptrend or daily support meets 4-hour downtrend, you're going to have 24 hours of range and rubbish. R&R. Range and rubbish. Just remember that. Right, daily support meets 4-hour downtrend equals range for 24 hours. Daily resistance meets 4-hour uptrend equals range, 24 hours. Why do you think that is? Why do you think the pound has been ugly for 24, 48 hours? Because you had this 4-hour downtrend running into daily support. You got all the bears on the 4-hour going, no, this is short. And you got all the bulls going, no, this is long. No, that's short. No, it's long. No, it's short. No, it's fighting it out. You know that when you're in this scenario, you're going to have a 24-hour period of ugliness. I'm obviously simplifying it massively to try and sound cool, to be honest. But I totally agree with you. It's extremely difficult. I'm trying to put a few little tools in your hand that at least you're equipped to deal with it, not just blindsided. I'm telling you that the pound's going to get ugly between 58.70 and 59.30. I'm pretty sure you're going to stay in a nasty range there on cable for about 24 hours there. Date, session, entry, what you were doing, some remarks. Copy a chart in right below it, or copy a chart in the space. Having the intestinal fortitude to stick with a winner and not fade out of it. All right, guys. Well, I hope you enjoyed it.